Good morning, this is Mayor Valensky with Driving Markets. Okay, let's have a look at what is driving markets at the moment. Spectacular volatility. The Dow has come down from 35,000 within 10 days all the way down to 33,000. The Nasdaq is hanging around at 14,600 and the S&P is all the way down to 4,200. A major correction. Why? On the back of fears of inflation and fears of interest rates. Not only that, we've got rising unemployment, not rising employment, not rising unemployment. Repeat that. Rising employment, not rising unemployment. When you have full employment, that is going to concern the central banks, especially in the US. The Fed is very concerned that the labor market is still very condensed. It's very pressurized, and that is going to put price pressure, obviously, on goods and services. Now you've got the NFP, the non-farm payrolls that are going to come out today on Friday. That will be another lead indicator as to where we're going regarding employment within the US. This week you've had job vacancies came in a lot higher than expected, and the Fed is going to raise rates by another one more time this year, at least, probably twice. Going into 2024, you can expect another 2 rises. Inflation is creeping up. It's not stopping. It's in the input prices are rising, and obviously that's going to have an impact on the end result, which is the goods and services, as to what the consumer is paying for. Look at oil. Oil went all the way up to $95 a barrel. It's come all the way down to $88 a barrel. That's a $7 drop, but the trend line is still pointing north. 3 things need to happen for this market to turn around. Lower oil prices, but not because of a recession. Lower dollar and lower yields on the 10-year US Treasury. 10-year US Treasury yields are far too high, running at 4.8+%. They need to come down to around about the 4.5, 4.4%. Bonds are oversold in the US and are looking very, very cheap at these levels. Once yields come down on the US 10-year Treasury, then equity markets will move up significantly. But until there is a confidence brought back within the marketplace, then the markets are going to be very volatile, trending down. Towards the end of the year, towards the end of mid-October and towards the end of the year, markets will probably bounce. Simple reason that the bankers in London and Europe and New York and Hong Kong, they'll want the end of the year bonus, and therefore they'll be pushing the markets up. There's a hell of a lot of money sitting on the sidelines waiting to come in. However, in 2024, you're probably going to see some sort of a major stock markets crash globally, around about 25 to 30% drop over a period of time, due to rising unemployment and due to lower volumes of business going through the books. For example, the S&P 500 in the US, even though it's glittering and it shows that it's grown this year, most of the companies are seeing lower volumes and seeing lower profit reporting. However, the big 7 and the big companies are hiding the true facts of what's going on within the economy. Look at the Nasdaq. You've got the top 7 companies that represent 55% of the Nasdaq 100, and the other 45% is split amongst 93 other companies, of which most of them are seeing a downturn in their activity and a downturn in their profits, and that eventually is going to have an impact. We are building up a premise, a grounding now of a major market collapse due to the fact of overvaluations, and money has become much, much tighter. Property in 2024 is going to fall. Rents are going to come down. You can follow me, you can subscribe, you can share, you can comment, you can like, you can do whatever you like. This is Mayor Valensky with Driving Markets. Catch you later.